Brilliant, great. Well, thank you for everyone who's obviously helped put on today's event. I'm going to try and bring this together, I guess, in a few different ways. My mind's kind of buzzing actually after hearing everybody speak, so I've got to try and stay on track. Although I was told I have a little bit more time than I thought, so we might explore this in a bit more detail. I'm the CEO and founder of Calls9, and we're a digital innovation and transformation agency, which means we build digital products and services, and we help people improve existing digital products and services. We've been running for 12 years, so we absolutely predate some of the technology I'm going to talk about today, but I think that's what makes it interesting. There's a real convergence happening at the moment, and for me and for our business, it's very much around Web3. So that's what I'm going to talk to you about in terms of gamification, fintech, and how all of these things come together. Just out of interest, raise your hands if you understand what Web3 is, if you feel like you understand it. There will not be a pop quiz on this, so this is just, okay, right. Keep your hand raised if you hold cryptocurrency. Yeah? No, is that up or down? I can't tell. Okay, it's partially up. Okay. What about NFTs? Anything like that? Okay, a few. Right, I'll come back to that later. I'll hopefully bring you back into that. So the types of products and services that we're being asked to build now are quite different to the products and services that we were building a few years ago. So we're actually building Web3 enabled games, Web3 enabled applications, and all of them are pretty much following this kind of playbook that I want to try and explain today. So I've hopefully not too controversially put fintech in the TradFi section or traditional finance section. And that's certainly not in any way to denigrate it, but to actually say that I think it's a foundational layer for transacting. One of the points that was talked about earlier was actually how do we pay people large sums of money, perhaps in prizes, and how do we move that around the world? Well, fintech itself might not have the answer, but if it interfaces with Web3, there might be some solutions for moving money around a little bit easier. In terms of gamification itself, I've had the real pleasure of working with some of the largest games companies in the world, as well as some really cutting-edge games startups. And I think the things that stand out for me are that gamification doesn't need to be limited to games. There are lots of applications beyond it, and really at its core, it's an understanding of consumer psychology and incentive mechanisms. And as DTM was saying, you can use that in a socially responsible way. So there's lots of really interesting things you can do when you unpack that. And then the last part of what I think is the sort of new evolving playbook is Web3, which is this sort of mystical concept I'm going to try and explain a little bit more today, hopefully demystify it. But it does cover all of the buzzwords, I'm afraid, from blockchain, smart contracts, NFTs, and cryptocurrency. So hopefully I'm going to bring all this together, explain why these things are related, explain why it's a really exciting time for the games industry, and actually why fintech's got a central role to play in that going forward. So when we look at how we're building software now, and I think where the greatest overlap for these technologies comes to pass, it's actually by combining these three elements. So having an economic incentive, which is oftentimes the bedrock for an interaction in the first place, whether that's taking part in an esports competition, whether it's playing a play-to-earn game, or whether it's something a little bit more creative, identifying what the economic incentive is important, and oftentimes that's where fintech has a really important role to play. The next important pillar is what we call social value and participation, and this is where brands can build advocacy with users in really, really unique ways that they've not been able to before, and it's also where users can gain really unique interactions with their brands, whether those are games, whether those are completely physical or completely digital engagements. And then the last element is kind of saying, how do you bring all this together? And this is where I think gamification comes to the fore. And it's about having a feedback loop, a hook that makes sense, that keeps the users coming back. If it's a video game, then it's pretty straightforward, right? That is the hook. But there are lots of uses for this technology in different places. So just walking through some of the kind of economic incentives in this new model. There's a lot of talk about earning through your actions, right? So whether that's actually taking part in an esports competition or whether it's taking part in a play-to-earn game where my actions over time accrue maybe credits or tokens or money which I can then cash out, actually doing things can actually reward me with an economic incentive. And increasingly, there's a lot of this crossover in the real physical world as well. So there are startups that are giving you cryptocurrency tokens for the amount of miles that you cycle on your bike, for example, or the amount of time that you spend helping out other people in a charitable concept. So earning through actions is a really interesting part of the puzzle. Increasingly, we've got paying with crypto instead of cash. Now, I know crypto is going through a slightly rocky period at the moment from a PR perspective, but don't write it off. The ability to pay with crypto really isn't going anywhere, and what you're seeing is some market volatility that's likely to correct itself. And if you wanted some evidence of that, Google literally this week announced that with their Google Cloud Compute platform, they're going to allow certain businesses to pay for services using cryptocurrency. So that's a business that's turning over about $6 billion every 90 days, and they think it's important enough to be able to take crypto payments. So the rest of us should probably take note as well. There's also a conversation around how do we enable users to trade and swap items with each other. In a gaming concept, oftentimes that's about things they've earned, but it also can be applied to a physical world setting as well. And then lastly, there's the idea of actually, can we use all of these technologies to create recurring revenue? And NFTs are actually a space which I think are pretty misunderstood at the moment, but the best way of thinking about NFTs is they're a smart contract attached to an asset which actually might be able to give you recurring revenue over time. A good example would be that we're going to have a rentable NFT standard coming soon. So as an artist, you might be able to loan out your art to virtual art galleries, for example, get recurring revenue, and actually get a slice of the trade volume every time it gets handed down to other people. From a social and value participation perspective, this is where I think the kind of convergence of fintech gamification and Web3 in particular has got some really, really unique opportunities. So it turns your brand followers into a community, it helps you create a shared decision making, and it also helps you create what I'm calling a set of aligned interests. So anyone that's in the gaming community at the moment probably takes a lot of this stuff for granted, right? If you feel passionately enough about the direction a game should take, oftentimes the developers will listen to you. That advocacy element is starting to spill over into other areas. A good example would be that from a social interest perspective, Patagonia recently came out and said, we're going to basically take our entire company and we're going to put it into a trust so that it's not going to be run by the commercial shareholders, but it will be run by this set of trustees so that we basically stay true to our brand values forevermore. That's really exciting, but if we were to kind of convert that into a gamified Web3 concept, we would say we'll sell a bunch of tokens to shareholders that give them voting rights over how that structure and organization works. And instead of a trust, we'll actually have something called a DAO, which is a decentralized autonomous organization. So you actually, just by purchasing a cryptocurrency token, could potentially be running companies in the future, which does have some interesting legal ramifications, but it's undeniably the direction of travel. And the reason that it's spilling over from the games industry is that the gaming community is very, very passionate. You do not want to be on the wrong side of the gaming community because they feel so passionately about the thing they spend time on. But that energy and enthusiasm, I think, is coming over into other areas as well, and we're seeing it through what we call social value and participation. Then lastly, we've got the gamified element, which to me, I mean, I am a gamer, and I think this is really cool that you actually get to now stand up here and talk about games when there was a point in time where you weren't allowed to play them for as long as you wanted to, and you certainly had to deny that you actually played them, okay? But it's pretty cool. So what does that feedback loop look like? Well, increasingly, we're looking at points and rewards that actually have an in real world value to them. Now, that value could be converting into cryptocurrency and therefore being able to cash out. It could be converting them into points that can be redeemed at a retailer, or it could actually be VIP status at certain events. So some games are actually rewarding people with NFTs, which are essentially tickets that you can take to physical events that give you access to backstage areas, maybe access to your favorite movie stars, pop stars, whatever it might be. So that's a pretty interesting feedback loop that's kind of only really possible with this technology when it comes together. The next two are pretty close to my heart, so personal impact and community impact. It might not look like it, but I'm a bit of a fitness addict, and so my Aura ring tells me to sleep and my Garmin watch tells me to exercise, and they sometimes fight with each other about which should be taking priority. At the moment, nothing really happens if I don't do it or if I do it. And in the future, I would expect these devices and I'd expect these brands to reward me for my behavior. I'd like to connect them to my insurance company and tell them my 5K PB and get a discount maybe on my healthcare. I think that's where it's going, and I think that's the personal impact component. With Web3, because it's immutable and trustless, which means we know that something has definitely happened, we can validate these things and prove them in ways that we haven't really been able to before. So that creates this really rich tapestry of opportunities around the personal side of things. I think on the community impact, there are some really interesting startups in the North which are looking at measuring your carbon footprint, for example, based on your transaction spend or your travel or whatever it might be. I'd love to gamify the reduction of your carbon footprint. I'd love you to be rewarded in real terms for that, whether that's cash, again, awards or some sort of perk, right? And we can actually validate and check that if we use technologies like Web3 and gamification together. And then the last thing's about behavioural change. I think games are wonderful, and I totally agree with actually the positive impacts that gaming can have on team building and resilience and communication. But if you start to cross these things over into the physical world as well, which Web3 lets you do, which wearables let you do, and if anyone's been following the announcements from Meta this week, their hardware will let you do, I think this is really where it gets interesting. Because whilst gamification in a virtual sense is, I think, well established, gamification in the physical sense is only really just beginning. So augmented reality, which within 10 years I think everybody will be exposed to, will be bridging the gap between the physical and the digital world, and actually I think will drive behavioural change. So when you're wearing your VR glasses or contact lenses and you go and look at that new car that you want to buy and it pops up and tells you that it's going to destroy your carbon footprint and you'll lose your NFT around carbon saving, maybe you won't do that. Or when you're in the supermarket and again you look at that piece of food, you think, I'd love to have that, but that's going to ruin my calorie count and that's going to have an insurance impact. Maybe you won't do that. That's all gamification, even though it doesn't sound like it's a video game. It's connecting a feedback loop through this digital ownership mechanism of Web3 back into the real world. And to come back to the fintech element, everything I've talked about has a financial transaction element to it. So unlike a lot of people, and just to be clear, I'm not giving any advice about whether you should buy or sell crypto, I don't believe that banks are going to disappear. I don't believe that everybody is only going to have digital assets, not physical assets. So fintech isn't going anywhere. I think its role will change. I think that for many consumers, their entry point will not be a bank first or fintech first entry point. I think it will be brands that we haven't even created yet, but behind the scenes, they will be backed and underpinned by financial institutions, financial service providers. And so there's a large addressable market to go out there. So trying to put this in context, some of the things that we do. So this is a project that we're building and which is launching later this year. And this is a video game deliberately to try and bring all of this together. So this is what's termed as a play-to-earn video game. And does play-to-earn mean anything to anyone in here? Raise your hands if it does. Amazing. Okay. So play-to-earn is getting a little bit of a bad rep at the moment, I think it would be fair to say. But I checked the market cap of the top 3 play-to-earn tokens just before I started talking, and it's still about 3 or 4 billion. And that's now in the bear market at the bottom of the market. And obviously it was worth a heck of a lot more 12 months ago. So play-to-earn, I don't think is going anywhere. I think it's a little bit like in-app purchases on mobile games. I think we're in the first wave of things that didn't really work out. The market will stabilize and then we'll come back. OppiPets is really in that category and making that bet. So this is a play-to-earn game which works across mobile, it works across desktop, and essentially people create these avatars, they battle them against each other. There's a whole trading economy that sits inside it, and that's one of the really interesting things about Web3 and fintech and gamification in this context, is that you can build dynamic markets that would otherwise have been static. So from our client's perspective, all of the NFTs that are created inside of this can move outside of the game, can take on a life of their own, can be traded in lots of different ways, but the client can still get a cutback and the player can still get a cutback as well. So it is a video game, it has all the things you'd expect a video game to have, but it's part of that new wave of player-centric activity. So there are governance tokens that players can purchase to have a say over the game. There's the Web3 component in terms of the NFTs and the cryptocurrency. But we also have a fintech layer for premium features and for transferring fiat currency in and out of the game. So it has the three layers I'm talking about. Moving to a different project, but interestingly within the same client group, we have Opus Cloud. Now, everybody in this room has a smartphone, I'm assuming, and most of you will go home tonight and you will plug it in and you will charge it because you have no choice but to charge it. And at night, your phone will basically do absolutely nothing. Opus Cloud wants to change that, and it wants to take the spare compute capacity on your phone and make it available to a global distributed cloud compute network that we're building to actually solve tech for good challenges overnight whilst your phone is charging. Now, that hopefully in and of itself is a really good reason that people should check this out. But we also have a points-based system as well, so we're gamifying this experience. Through this application, we want to have a positive impact on the environment. Cloud computing is a really, really heavy carbon polluter. So if we can reduce some of that, switch it to the devices that you've got in your pockets, which are literally doing nothing at night, and in the same time actually solve some tech for good challenges around protein synthesis, medication for cancer, environmental computations, that seems like a win-win for everybody. But we're gamifying that because every time that you do this, you get a report that tells you what your phone did overnight, you accrue points for your behavior, and you actually can cash those points out for a cryptocurrency. That cryptocurrency can be traded, obviously for other cryptocurrencies, or you can flip it into fiat if you want to get some cash. So again, we've got those three elements that we've touched upon, where we have an economic driver, which is the points into crypto. We have a social driver, which is doing good. And we have a gamified element, which is the daily report, league tables, competing with your friends, and hopefully we're going to have a really positive impact on the environment with that. Both of those projects actually share the same cryptocurrency behind the scenes, and that's another thing that's unique about the Web3 world, and I think where fintech is heading. At the moment, the global currency of choice obviously is still pretty much the dollar, but that won't always be the case in the digital world. And companies that build up a crypto ecosystem actually have the ability to sit on top of the traditional fintech space and create value in their brand, which is unique to their brand and which drives the stickiness. The biggest example of this at the moment would probably be Starbucks. Who shops at Starbucks? Anybody? No one's going to admit to that. Okay, one. You're in the minority then, because 30 million people do, and it's the largest loyalty program in the world outside of China. And they flipped that entire loyalty program onto Web3 with NFTs to give in real life benefits as well as digital benefits. So this is what we're seeing. This is what we're building. FinTech is at the heart of it all. And I suspect there'll come a point in time where Web3 and FinTech maybe just become one, because really they're doing very similar things. But for now, they stand as having an economic incentive, a social value participatory function, and then a gamified feedback loop that brings it all together as well. I should add, I didn't want to say it at the beginning, but I spent 12 years doing this and 20 years building software. I did have a brief journey as a corporate commercial lawyer as well. And I can certainly recommend, I have no connection to DTM, but I can certainly recommend if you're a startup to definitely get your legals checked, IP, employment, all the things that they were talking about. It can save you a lot of drama down the road. And in fact, even professional services is going to be impacted by all of these things as well, and they will change and they will evolve. So it's a really interesting time. I think gamification is central to both obviously video games, but also a broader consumer base of engagement. And I think FinTech and Web3 coming together just creates some really unique opportunities. So yeah, thank you.